Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Good morning, everybody, and welcome to the 26th of December. It's the day after Christmas edition of the Daily Market Commentary. I am your host, Chuck Fulkerson. Hope everybody had a great day off from the markets yesterday. If you took the day off on Monday, you may have missed a huge move, but we will talk about that. I did not do a daily market commentary on Monday. I made the promise to myself that on Sunday evening after I did the live trading room, I would close the computer, and that's exactly what I did. So no harm, no foul. I'm totally okay with that, but let's go ahead and review what we do each and every day. For those of you new to the channel, do me a favor, click that little subscribe button, hit the notification bell so you get the updates as they come available. If you're not new to the channel, do me a favor, leave a comment, leave a like, leave a thumbs up, whatever it is that you do. That would be awesome. It helps the YouTube algorithms know that we're alive. All right, let's dive right in. Okay, so the S&P this morning, we're up about 18 points. And up 18 points sounds great, but if you turn the markets off on Friday, then you turn the markets off Friday and came back today, then you see that we've dropped almost 100 points in the S&P. So while being up 18 this morning sounds good, we were basically down about 100 since then. So I have said this over and over again ad nauseum. I'll continue to say so. Every rally is considered an opportunity to get short. That's all it is. And now I can see on the 4-hour chart that we're coming up to a potential candle-to-candle reversal area right here. Excuse me, not candle-to-candle, wick over wick. Wick over wick area that we have up here. A little bit of a level right there. Now, that's what it looks like on the 4-hour time period. If I slide down to the 1-hour chart, that level may be a bit easier to see, and it's this area right here. Now, the thing I like about this is this is right around market open on Monday. So from Monday's market open. Now, this is a pretty wide area, 2388 by 2414. If that level is too wide for you, what can you do? Well, a lot of traders say, well, just go to a smaller time frame. And if you go to a smaller time frame, let's say we go to the 15-minute chart, could I look at a 15-minute level and shrink this area up? No question, absolutely you can. However, when I go to a smaller time frame, the level's not as clean. From a pure price action perspective, this was a move down. This was a quick retest, and now the level loses a lot of what you may have liked about it in the first place. So if you go to a smaller time frame, I actually think that the level gets a bit higher. And you'd want to go just a bit higher up. Now your level's going to get a bit smaller as well, because if you go to a smaller time frame, I think that you're looking more at this as the area. Now this is Globex. This is definitely an area that was established during the Globex session, so it's slightly lower probability, but it's also a bit more narrow, a bit lower risk. Now, is there money to be made on the way up in case we can make it up to there? Sure, if you want to try to go long. I am not willing to go long in this market. There's nothing at this point that tells me to go long in this market. If you're on a 5-minute time period, you may want to consider that, right? I mean, we've got a little bit of a rising trend channel here over this Globex session, so you may get a little bit of a bounce off of where we are right now. I'm doing the video a little bit later today than usual, giving you a little bit more history of the Globex movements. So yeah, I think there's an opportunity if you want to get long, to ride it up. I'm not willing to do that. There's many other things for me to look at. Nasdaq, NQ. I look at the NQ level, and on the hourly chart, we don't have that same area. But if you notice, this is that Globex section that we looked at in the ES. So in the ES, we looked at the retest of this Globex trade, of the Globex high. And the NQ has already tested that. If you notice, the NQ hit that area and fell away. That's why I like it in the S&P. So the S&P did not test and see that Globex area that was created about 5:45 a.m. If I look over here, 5:45 a.m., same time of the day that this area was formed, this one's been tested by the Nasdaq, and we sold off of it very strong. So I still like it in the S&P. And even in the Nasdaq, this can be used, I think, a second time. It's lower probability because it was tested once, but it does still have some validation to it based upon that movement. Looking at crude oil. So crude oil, we are starting to get a bit of a rollover. I wouldn't be, we're really falling down in oil yet again. This was our breakout short in oil. We talked about this on Friday. Leave me a comment if you leave me something in the comment section below if you got in on this short on Friday. I think there's another opportunity to get short on a breakout below this candle's low that was put in on Christmas Eve. For those of you that are interested in getting low below here, especially if we base in front of it, I'd need to see some basing in front of it. But once again, is there any reason for me to be a buyer? No, I'm not being a buyer in oil at this point either. Gold. Now, gold, there is some reasons to be a buyer. Gold is definitely continuing its march higher. And it's coming into what could be considered, if I go out to the 4-hour chart, a little bit of a supply area. Does that mean I'm going to be a seller? No, it does not mean I'm going to be a seller because my big picture is still telling me to be a buyer. However, what it means is that if I get a little bit of a pullback, I know that this could be an area where we could pull back from. And so on an hourly chart, I wouldn't want to be buying up here, right? If I bought right here, if I bought this breakout, I've got this area up here that could cause a little bit of a reversal. Now, I'm a big believer in wait for that 4-hour to give me enough confirmation before I'd be willing to get short. And when I've got the, we're sitting at a level in gold where it's slightly overextended, and we're definitely overextended to the downside in both the S&P and in crude oil. But I'm not willing yet to go, just like I'm not willing to go long on those, there's no reason here for me to go short on these because these 4-hour trends and daily trends are persistent, right? And they will blow right through what would normally be considered areas of supply. And that's kind of what I can see here, is that this may go right through it. And so I'm not willing to tempt fate, right? Yes, it's high on that, call it the supply-demand curve, but I would want to wait to get long on a pullback somewhere here after this has been tested, because once this is tested, if we do pull back, it's going to weaken the level. So the next time it should blow right through it. All right, next, bonds and our currency markets. So in the bond and currency markets, we are getting a little bit of a pullback here in the bonds. I think there could be a decent opportunity right here. Right in there could be a decent opportunity for a little bit of a reversal in the ZN. As far as the Aussie goes, we've got a confirmation short up here. That short worked out really well for those of you that took it from our Friday's edition of the Daily Market Commentary. Leave me a comment below if you did jump in on that and were able to take it. But we've really done nothing over the last couple of days in the Aussie. The euro, we are coming, kind of chopping around here in the euro. I think it's got more of a bias. If I look at the 4-hour chart, we see that I have put in a lower swing low and a lower swing high. So I would be okay shorting on the euro. As a matter of fact, this area right up here could be a decent area to get short, which would be a retest of this area right up in here. I like this. It's right around the European market open. There's a pretty strong move away. Your stop would still want to be up above this pivot, right? Because this is really, this pivot here could become pretty strong. But this dropping, basing here, if we get a little touch into there, we may see a nice little reversal coming out of that level. We're basing right in here based on this little level right here. This is the 2 a.m. reversal, but there's not enough buy orders here to propel it forward. So we could even theoretically break down below this for a short entry. But all in all, I'm definitely looking more on the short side for the euro. Canadian dollar, I'm still in between two areas, our 15-minute level above, our potential breakout down below. And then the Great British Pound and Japanese Yen, I'm between some areas in the pound. The yen, we came really close to a potential short entry, however, did not get that order filled. And so what I've got to do is I've got to remove that level at this point. I'm not even going to make it a confirmation. I'm going to remove it based on the 4-hour strong, persistent trend direction. Now, if we get enough of a pullback in the 4-hour, we may have a potential for a long opportunity, and it would be this area right in here. So if I wrap some lines around this area right in here, then that's where we'd be looking. Okay? All right, so that is our commentary for the day. If you've got any questions, shoot me an email, support@tradersarmy.com. I'm here to help you and answer as many questions that you may have. We will not have a daily market commentary tomorrow as we are doing the live trading room. Live trading room days, I don't do a daily market commentary. So for those of you that are subscribers to tradersarmy.com, we'll see you in the live room tomorrow. For those of you that are not, go to Traders Army, learn a bit more, and I will be back on Friday morning. So I will see you all soon. Peace out.